All right, what's going on, guys? Dan here at StockAbility. So in today's video, I'm going to be talking about, I would say, a little bit more of an advanced topic. So if you're new to trading, hang out, watch this video, put it on the back burner. If you have some experience trading, if you have larger trading accounts, if you like fundamental research, if you like putting on swing trades that are kind of from a macro perspective, this video is going to be for you. So what I'm going to be talking about today in today's video are the housing market, which obviously is a hot topic right now. I'm going to be talking about building permits and housing starts, and I'm going to be talking about some fundamental concepts to go through that in this particular video. So if you're new to our YouTube channel, make sure to like, subscribe just below this video. There's a little bell. Click that every time we upload a video. It'll send it directly to your inbox. So that being said, let's get started on this video. All right, so what I'm pulling up here is release, right? And you can see this on Bloomberg, CNBC. I'm going to show you how to find it here on Bloomberg as well. But this is on the census.gov website. So what I'm looking at here, and again, I don't use this too much personally in my trading. It's when markets get overheated or you see certain things happen, I want to look at fundamental research and data to try to see if there's any discrepancies, divergences in that data and what is actually happening on the underlying equities that are related to that particular data set. Okay, so what this is showing is monthly new residential construction for March of 2021. It's showing building permits, housing starts, and housing completions. Okay, so this data here is indicative, and you can kind of scroll down and look at this and see. And the census website will show you and discuss how to read this. And you can literally see the exact data going through this. It'll explain the notes on this, the month over month changes, what's happened from last month to this month, what's expected, what's happened in years prior. You can come and look at this data. And basically what this is gauged for is to kind of see what the housing market and what builders and lumber and everything related to the housing market is kind of doing to give you a gauge of where that market and that micro economy is typically headed. Okay, so this is something I look at. And so last week, we actually, and I'm going to pull up here, this is Bloomberg. You don't have to go to the census site, by the way. You can find this on Bloomberg, CNBC, et cetera, et cetera. So the real big headline was this, okay? So last week, we hit an all-time high, or not all-time, but the highest construction start since 2006, okay? So when you look at this, let's kind of pull this up. This is a Bloomberg chart here. Obviously, '06 is back here. This is, the pandemic crash, and now we're back here to where new construction of homes are the highest since 2006, okay? So obviously, if you're like me, okay, for the past 5-6 years, I'm in Phoenix. I've been, houses getting too ridiculous. It's too ridiculous. Phoenix is growing insanely. People moving here, Austin, a lot of states are seeing, obviously, housing go through the roof, okay? Obviously, it reminds me of Vancouver. I used to spend a lot of time in Vancouver, Canada, up until the pandemic. I remember houses going over $500,000 offering prices. You're seeing that happen here. Okay, so what I'm looking at in this data is when I see these type of headlines and I see this type of scenario, I'm curious as to, what's going to happen. Okay, so the question becomes, and let's not dive too deep into this, are we going to see the '09 crash again? Okay, I don't think so. I don't think I'm that smart to the point where I can understand those concepts. They're kind of really in-depth, concepts to get into. It's not something that I specialize in. I'm more of like a price action trader, some portfolio manager experience, but it's not something I really dive into. The real question that I want to take and look to this lens is, how can I use this data to make swing trades? So if you're a trader that has a large investment portfolio, if you like to swing trade, if you don't like to day trade, this type of situation, this kind of event-driven news, this type of market we're in, is presenting a scenario potentially where there might be opportunity to bet against housing stocks and different stocks that are correlated into the housing markets, okay? So let me kind of continue this piece here and explain to you the next concept on this. So this data came out last week. There's also additional data that came out from Canada, right? So obviously, housing markets pretty much across the world, for the most part, not everywhere, are just through the roof, okay? So this same thing happened in Canada. So basically yesterday, the report came out on Bloomberg. Canada housing starts soared to highest since at least the 1970s. Obviously, real estate is on fire, okay? So even Canada's seeing that as well happen. Obviously, you're seeing the US, okay? So you're getting all this good data, okay? Now I'm going to take you to the charts here, and I show you how to use this cross data to make a thesis, to potentially start to put together an understanding of do I want to start betting against these markets? Okay. So nail is a direction or a direction. I'm going to say that incorrectly. The 3x Home Builders ETF. Okay. So this ETF has within it home builders. Okay. So if you go and take a look at this, you can see different home builders in this ETF. Now, again, on a side note, I'm not really a big fan of this 3x stuff. You see it kind of all over the place. In reality, they're supposed to be the 3x as to how the underlying ETF moves. Legitimately, they don't, okay? And some people take it to a point where they're like, hey, if I trade the options on them, the options move 3x. It's a completely false understanding. I've seen this explained, sadly, on TikTok and some other places where it's just completely wrong. Obviously, we're in the day and age where the information flow is crazy, but you also see a lot of bad information being spouted, and one of those bad pieces is what I just explained. So what this ETF holds is this, okay? So you can go to the top 10 holdings on Yahoo Finance, right? It has major home builders. So one of them reports this week, actually, in D.R. Horton. So D.R. Horton, Lennar Corporation, right? You have, I think this, actually, I don't know there's that company, that Pulte, I know them because they're out of Phoenix, and obviously Lowe's, okay? So what this does is it's putting together stuff that's related towards home builders and housing, okay? So this ETF obviously has just obviously skyrocketed. Now there's multiple ways to look at it from a technical perspective. Obviously, technically, you're at a triple top on this, 3 different tests. The other way, the thing I'm looking at, and the reason I wanted to make this video to start this is this, okay? This is what I'm seeing. You had 2 good pieces of data. You had housing starts from last week in the US, the highest since 2006. Now you had Canadian housing starts yesterday. Now hang with me on this, the highest since 1977. Okay, why then today are you seeing a massive disconnect from that type of data? Okay, so I have a good friend of mine, works at Gavical Research. It's a massive institutional research firm. We're on an email thread. We were kind of discussing this as well today, literally this morning. And what he had said to me and to our group thread was, hey, look, when you have good data and the underlying charts are not responding, that's usually a signal of what's to come. Okay, so you're getting all this really good data in the markets. Housing starts are up, and yet you're having an 8% day down on this particular name. Okay, if we go and take a look at Toll Brothers, again, this is down about 4% on the day. If we look at it from a weekly perspective, obviously it's been vertical. If we look at DHI, same kind of situation here. Also vertical, down about 4% on the day. Okay, we can go and look at home builders, or not home builders, but like Lowe's, for example, because obviously that's included in the 3x ETF, and take a look at this. Okay, so when I see this data, when I see these type of situations from a macro perspective, from a fundamental perspective, what that does for me now, heading into the next 2, 3, 4, 5, 6 months, is it changes how I go to manage a longer term portfolio. Okay, so I'd say majority of what I do is short term trading, but again, I want to be aware of what's going on in different market situations that provide opportunities. Okay, so what happens now for me, like I mentioned, is I start to look at how do I profit potentially on the short side from home builders, companies related to home builders. What is the fall off if home builders start to come in, right? Lumber, the lumber ETF is through the roof as well. You can look at lumber futures, not wolf. Maybe it'll be a wolf eventually if it pulls back. But the lumber ETF is obviously in a massive bull market as well. Okay, so when you're looking at it from this perspective, looking at those data pieces and then adding the technical portion allows you to start developing, hopefully, trade thesis to start seeing short moves into the next 3, 4, 5, 6 months. Again, I'm not calling for housing top in the markets. What I am pointing out to you guys is this, is you've had housing starts that are massively positive, and the home builders are not reacting to that news. Okay, that's a big deal. Got to pay attention to that. Whatever that means to you, however far you take this in your research, that's entirely up to you. I'm just trying to flag this for you in this video to show you how to start to develop a longer term macro thesis in markets. So that being said, that's a short little video, actually not too short, about 10 minutes here. Again, it might be advanced. I don't have any positions on this just yet. My research starts now on this, but I wanted to put this out on the YouTube channel to show you guys this information. If you guys have questions, you guys want to learn more, make sure to like, subscribe to the YouTube channel. You can actually get a free 2-week trial into our guided trade sessions. It's hour-long sessions where me, myself, and the other coaches at StockAbility go through live market situations. You can get a 2-week trial on the website. Head over to StockAbility.com. There also might be a link below this video if you'd access it as well. So again, thanks for watching. I'll see you guys in the next video update.